first thing I want to do today, as a little bit of an icebreaker, and because it's obviously very different delivering these kind of sessions in this way, it really doesn't allow much opportunity for me to engage with you, the audience, and what it can be is a lot of you sat there listening to me, and I don't want to send you to sleep on your lunch hour. So what I'd like you to do first of all is, if you've got a mobile phone with you or a tablet, or you can actually use an Internet Explorer page on your computer, I just want to do a little bit of an interactive survey and just ask you a few questions. But the way that it works is that I'll give you a URL, a web address to visit, and you'll need to put a code in to access this survey. So the web address, I can put it in the chat facility. I mean, it does work best if you use your phone or your tablet because it's separate to the machine that you're actually on, but you can use your machine as well. The web address is www.menti, which is MENTI.com. And I'm going to put that into the chat now. So it's www.menti.com, and the code that you will need to enter when you arrive at that website is 49289431. And again, I have put that into the chat for you. And what should happen is once you've put that code in, you should be faced with a question which says, what are you most looking forward to doing?
Sorry, Jonathan, can you repeat the code, please? I can't.
Yeah, it's 4928.
Yep.
94.
Yep.
31.
Super, thank you.
Brilliant. So if you can't access it for whatever reason, please don't worry. It's just us gathering a little bit of information, really, and it gets you thinking along the right lines for the rest of the session. So the question is, what are you most looking forward to doing when you retire? Actually, I'll just share the results so that you can see them. So 13 people are looking forward to doing gardening and hobbies. 12 are looking forward to spending time with family and friends. Quite a large proportion are looking forward to traveling. Yeah, that would be my one too, I think. And some of you are interested in doing voluntary or charity work. That's great. Nobody's looking forward to breakfast in bed. So you're all going to be quite active and get out there and do stuff, it looks like. So that's great. Okay, moving on to the next question. How are you feeling about navigating the LGPS retirement process? So obviously, part of your retirement is going to mean that you need to speak to your employer. Your employer will need to speak to us, and then there'll be things that we ask you to do to complete, and there'll be information that we need from you in order to process your retirement. So it's, how are you feeling about navigating that process? Does it scare you? Do you think that it's fine? You've no concerns about it? Some of you may be in different situations in terms of, some of you may have already begun the process and you may be already engaged with us, and some of you may be, are not quite there yet because your retirement might not be for another 6 months or another year. You're probably all in slightly different situations, I would imagine. Right, so we're somewhere in the middle there. Most people are in the middle. Only one person is confident and comfortable. 5 are feeling quite anxious and nervous, and then we've got some in between. So that's good. That helps me understand where we are, and I will do a little bit of a temperature check at the end as well and see if we are feeling more confident about engaging in that process, and I'm sure you will be. Are there any specific topics around retirement that you feel may be a challenge? Now you can actually just type an answer to this one. You can just put in free text. And just one will do, you know, you don't need to spend all day on it. Tax is a really good one. Taxable allowances, finance, no structure, financial concerns, the process, sufficient income, flexible. No, but one person has said no, there is no topics that might be a challenge. Affordability, optimizing the retirement date, annuity, other pensions, lump sum versus not having a lump sum, income, delay cashing in, timings, when, having a purpose, affordability. There's some great ones there, and the good news is that most of these we will be covering today. There are things like, you know, what are you going to do with your time? That's always a concern for people, and I think there are resources out there which you can use to try and look at opportunities to get involved in volunteering. And there are actually, you know, courses that are delivered by external organisations as well, which will prepare you for retirement in a very general way. So this session today is very much about looking at your LGPS pension and how you navigate that process to make sure that you understand what your income is going to be, to help you plan for your retirement effectively, and to help you understand where you need to go to get your hands on the key information that you may need, and also to put you in a better position when the retirement pack comes through from us, because we will be asking you to complete a retirement pack, and there might be things on there that you're not sure about, or you know you're not sure what it means, and I'll also be able to give you a bit of a heads up today on the sorts of things we're going to be asking from you. Now you're probably thinking, gosh, you know, this retirement pack sounds like it's a very big piece of work. It really isn't. It's a few pages, and it'll probably take you 20 minutes to fill in, but some of the things can throw people because they're not sure what exactly we're asking for. In terms of tax, you know, financial concerns, that kind of thing, I am going to be covering that and signpost you to some useful resources. So hopefully you'll feel a little bit more informed by the end of the session. And other pensions, you know, that does come into the retirement pack as well. We will be asking you about any other pensions that you might have, and we will discuss that in a little bit more detail. And this is the final question for now, and we'll come back to this a little bit later, but describe what retirement means to you in 2 words. A new start, yes. Less stress, absolutely. Not working, relax, enjoy, freedom, more time, change of pace, next chapter, less money. Yeah, that's true. Relaxation, controlling time, free time, new beginning, unpaid work, opportunities. Great. having more freedom, live, being relaxed, different, busy. Okay, that's great. Those are really, really positive words, and you know, it sounds like people are very much looking forward to embarking on the next chapter of their lives, which is how it should be. So that's great. So in order to put you in a place where you can look forward to experiencing some of those things, you know, there's a key part in that journey, which is your pension. So that's what today's session is about, making sure that you understand, you know, what the benefits are of the LGPS, how you go about making sure that you claim your pension in plenty of time so that you have enough money to enjoy your retirement once you finish. Okay. I'm going to share a set of PowerPoint slides now. So part of, in different parts of the session, I'm going to be flitting from one thing to another, and I'll have to share and reshare my screen. So if you can just bear with me, that would be great. So the topics that I have on the agenda to cover today are My Pension Online, your pension calculation, what will it be made up of, the minimum retirement age, what protections might be included in your retirement, what ways can you retire, what are the death benefits that are available in the scheme. I'm going to do a demonstration of the My Pension Online portal. We'll cover a little bit around the retirement process, and towards the end we'll just be talking about how you can help us to make sure that your benefits are paid on time. And of course there will be an opportunity for questions at the end. Okay, so we'll just start by talking about My Pension Online. This facility is available to most of our pension scheme members. I know that there are some members who are in the Newham Pension Fund, which don't have access to this at the moment. So apologies if you are part of the Newham Pension Fund. This bit won't be relevant, but I think most of the people will have heard or have seen this system at some point. Now, hopefully everybody who can access this system is already signed up to this system. And the reason that we say that is because if you are signed up to this portal, then it means you've got access to information about your pension whenever you need it. So this portal allows people to start running retirement estimates in your own time, whenever you wish, using, you know, live information that we've received from your employer. And it allows you to plan your retirement in a very proactive way. So we do encourage everybody to sign up to this system. And if you're not signed up, please do visit our website, which is lppapensions.co.uk. And from there, you will be able to sign up. I'm going to do a demonstration of this system a little bit later on. So we'll just park it there for now. I like to introduce it at the very beginning because it just puts it in your mind straight away that all of the things we're going to talk about today, the information, most of it is available on My Pension Online. How will your pension be calculated at your retirement? So what we need to look at first of all is when you joined the scheme. And the reason we need to look at that is because there were some significant changes to the scheme in April 2014, which I'm sure you heard about at the time, or you know, you may have forgotten, or maybe you heard about it but you didn't really understand what it meant for you. The changes that happened in 2014 meant that the LGPS changed from a final salary pension to a career average pension. So any of your membership built up before April 2014 will come under the final salary benefit regulations. And any membership from April 14 onwards comes under the career average regulations, so they're calculated differently. Now, what do we mean when we say final salary benefits? Final salary benefits are calculated on your final year of pay using an accrual rate and your service. So whatever your full-time equivalent rate of pay is in your final year before you retire, that's what we will use to calculate any of your pre-April 14 membership, along with an accrual rate and your membership, your service. So obviously the higher that final pay is, the more that will inflate the value of the pension built up in that time. And even though these benefits stopped building up in April 2014, they are always linked to your final pay when you actually leave the scheme. There are two situations where we might not use the final year of pay to calculate those benefits. The two situations are if you have had a higher year of full-time equivalent salary within the last 3 years, working back from your date of leaving, then we can default to one of those higher years. The other scenario is if you've had a reduction in pay as the result of something like a restructure, then in order to remain in employment with the same employer, you accepted a lower paid job, then in that case, there is a protection which extends to members, and it means that we can look at the last 13 years and we can calculate your benefits based on the best 3-year average. So the best 3-year average within the last 13 years. But in most cases, it's the final year of pay that we use. We then look at transferred in membership if that is applicable. So when you joined the scheme, you may have brought in some pension scheme membership from another scheme, and that would count in your pension calculation. And then we are looking at any care benefits that you have built up. Care benefits are the benefits that you've built up in the career average scheme from April 2014 onwards. Now, you're probably wondering where that word care has come from. It's nothing to do with care homes or care for your old age. It's just actually an abbreviation of the full name of the scheme, which is Career Average Revalued Earnings. Those benefits under the care scheme from the 1st of April 14 onwards now build up based on a 49th of your gross pay in each pay period. So thinking about the final salary scheme, we said that all of that membership is calculated on your full-time equivalent rate of pay when you leave, along with an accrual rate and your service. The care benefits are building up on a 49th of your gross pay. So every month when you get paid, whatever your gross pay amount is, divide that by 49. Whatever that amount is, that's the amount of income that is payable to you in your retirement each year. And all of those things make up your LGPS inflation-proofed pension. So your pension, once it is in payment, will be linked to inflation and will rise whenever there is an increase in inflation, linked to CPI. There's an example there of the final salary benefit calculation, which is for somebody who has 5 years under the 80th accrual rate, 6 years under the 60th accrual rate, you're probably thinking now, he's getting far too technical, and maybe I'm losing people. But don't worry too much about this, because the actual mechanics of the scheme are quite technical, but I'm just trying to give you the most relevant points. But the reason that there are two separate accrual rates there, so you've got 5/80 and 6/60 multiplied by 20,000. The reason that there are two different ones is because there was a further change to the scheme back in April 2008, and the accrual rate within the final salary scheme changed from an 80th to a 60th. So again, it's just about looking at that pre-2008 and post-2008 membership, and that's calculated slightly differently. But for this person who had 5 years pre-2008, 6 years post-2008, on a full-time equivalent salary of 20,000, it would give that person an income at retirement of £3,250 a year, guaranteed index linked. Looking at the way your care benefits are building up, so we said that your care benefits are being calculated based on a 49th of your gross pay. So a 49th of 25,000, if that's what you were to earn in a year, is £510.20. So that means that for 1 year of membership earning £25,000, you would get back just over 500 a year every year in your retirement. Now that's for 1 year of membership. So obviously, £500 won't get you very far for the year in your retirement, but the idea is that you will be in the scheme for longer than a year. So in the second year, if you earn 25,000 again, your pension income would double and it would become just over £1,000 a year at retirement, and so on and so forth. So it keeps building up in that way. The minimum retirement age is now 55 in the scheme at the moment. So you do need to go, after your 55th birthday. The only sort of exception to that is an ill health retirement where there's no age limit. So we're looking for you to be at least 55 when you go. And the normal retirement age now is your state pension age. So the normal retirement age just means that that's the age that you can draw your pension without having any reductions placed on your pension. Typically speaking, anything before normal retirement age, there will be a reduction. The final salary benefits will be calculated on a normal retirement age of 65, because that was the normal retirement age in that scheme before the introduction of the new scheme in 2014. Some of you may have heard of the 85-year rule, and maybe that's one of the questions that you came with today, whether or not you have this 85-year rule protection. The 85-year rule is a protection for people who have a lot of service, and whose age and service added together make up 85. So imagine that you are age 60, and imagine that you have 25 years membership in the scheme. Then that comes to 85. So the likelihood is, depending on your date of birth, that there is potentially some 85-year rule protection. It generally applies to members who joined before April 2006. And what this protection does is it protects you from the reductions that would normally apply to you in an early retirement scenario. So thinking about it, if your state pension age is 68, then that's an 8-year reduction if you go at 60, that's an 8-year reduction on your benefits, on your care benefits. So if you had 85-year rural protection and you had the full level of protection, that would protect you from that 8-year reduction. To be honest with you, most people who have the full level of protection have already left the scheme now. So what we'd be looking at is tapered protection, but there is a table which is available online, and it will tell you based on your date of birth that if you've got this age 60 that if you've got this age and service adding together making up 85, it will show you what level of protection you are entitled to. But any of this protection is already included in your pension estimates, and any figures that you run online includes this protection as well. There is another protection in the scheme called the underpin protection, which is basically for anybody who might be worse off as a direct result of the introduction of the new scheme in 2014. Then anybody that fits that criteria there, the difference would be topped up for them. So anybody who was active in March 2012, 55 on the 1st of April 2012, active on the 31st of March 14, active immediately prior to the underpin date, does not have a disqualifying break from any membership of any public service scheme. Again, any of these cases we know about, they flag up on our system, and we would always make sure that the necessary top-up is applied. What ways can you retire from the scheme? So you can retire early from 55. Early retirement normally carries a reduction, so a reduction in the amount of pension that you receive each year, but obviously you are going to be receiving it for a longer period of time. Any figures that you see online, any figures that you receive from us will always include the reductions. What you may do on the other hand is go late, so you might want to continue working after your state pension age, and if so, then you can stay in the scheme up to age 75. At 75, you must draw your LGPS pension whether you are working or not. Another option is flexible retirement, so you may want to continue working at a reduced rate and draw the pension that you have built up at that point. You can do that. Your employer would have their own policy on flexible retirement and on what basis that needs to be done. So you do need to speak to your employer about that if you're interested in doing that. The other option is redundancy or efficiency retirement. So that's for anybody who leaves on the grounds of redundancy or efficiency, who is 55 or over on the day that happens, on the day that they leave. And in that case, the pension benefits are released with some protection from the reductions that would normally apply. So the reductions that normally apply in an early retirement scenario wouldn't apply in a redundancy scenario if you were 55 or over. If you are under 55 and you leave on redundancy, you're just classed as a normal leaver really, so your pension benefits would be deferred until a later date. Then there is normal retirement, which is just retirement at state pension age. There are no reductions, there are no enhancements. Some of you will no doubt want to understand what the death benefits are for your survivors and loved ones that you leave behind. So the death benefits are split up into two categories. One of them is death grant, one of them is survivor's pension. We'll just take the death grant first of all. The death grant is a protection for people who may die before they have the opportunity to draw the pension, basically. So, you know, if you die as an active member before you claim your pension, then there is a death grant payable to somebody. And if you do die as an active member, the death grant is 3 times your salary. So 3 times your annual salary. So it's quite a valuable payment. If you were to die in the first 10 years of claiming your pension up to a maximum age of 75, then in that case, there is a death grant payable as well. And that's calculated looking at what pension you would receive over 10 years. So imagine you're receiving 10,000 a year over 10 years, that's 100,000. And then we take off the time within that 10 years that you've already had it. So if you'd been claiming it for 5 years, then, you know, 50,000 has already been paid. That leaves 50,000 of this 10-year guaranteed period, which is left to pay as a lump sum to somebody. Again, we ask you to tell us who the best person to pay is. So regardless of which of those situations may occur, whether you were to die as an active member or in your first 10 years of retirement, you need to make one expression of wish. So there's an expression of wish option within the online section, within My Pension Online, so that you can actually update your expression of wish anytime you like. And that can be a family member, it can be a friend, it can be a relative or a charity, or, you know, whoever you want it to be. So make sure that you do that after today. You go away and check that. The other thing is the survivor's pension. So that's for a widow, a widower, a civil partner, a cohabiting partner, or a child. With cohabiting partners, there is some criteria which has to be met. So please do check that out on the website. But it would be up to the cohabiting partner to contact us in the event of your death, and we would then ask them to see some evidence of that cohabitation. And in the case of a child, then obviously that's a young person under 18, or if they're over 18 but in full-time education, we could continue to pay it up until they are 23. Okay, in terms of My Pension Online, I said that I would let you have a look around the system, which I think will help bring to life some of the things that we've just been talking about, particularly the lump sum, because we haven't really talked about the lump sum yet. So I'm just going to log in to the test system, which also gives me the opportunity to show you how to navigate our website. So our website address is www.lppapensions.co.uk, and this is the landing page. So depending on what the status of your membership is, so whether you're an active member, a deferred member just means you've left the scheme, a retired member obviously speaks for itself, or whether you're an employer or you're perhaps not even a member, you can select who you are there, and there are some pre-populated options to choose from there based on some of the most frequent queries that we get, or you can just go directly to members and choose from the topics that you're interested in finding out more about. Regardless of which page you're on, there will always be a link at the top to access My Pension Online. So if you click on that, and what we're going to do today is just log in. But as you can see underneath that, if you're not yet registered, there is an option to register. Once you've registered, you will receive an activation key either by email or by post. You need to come back to this page again with that activation key, and this time you would choose activate. But for the purpose of today, we're just going to log in. Okay. Obviously, if you've registered before, you will already have a username and password. Part of the process of signing up is that you create a security question, and it's actually 2 questions, and each time you log in it will ask you one of those questions. So you can see here it's asking for a mother's maiden name. And this is what the account will look like once you are logged in, except it will obviously have your name at the top and your personal information. At the top, you've got 2 buttons. You've got Home and you've got My Account. The Home one will just bring you back to this page wherever you are in the system. And the My Account page gives you a list of options which are exactly the same as the options that sit within each of these turquoisey green, whatever colour they are, these boxes, these tiles that you can see. So it doesn't matter which way you navigate, it'll take you to the same place. The first one is My Details, which gives you your name and your address, national insurance number, telephone number, email address, those sorts of things. You can update your home address and your email address and your telephone number whenever you like, so that's useful, particularly if you've signed up with your work email address, bearing in mind that once you've retired you won't have access to that email address anymore, so please do go in and change it once you've finished. It's probably always better just to use your personal email if you can for this system. The next, we've got scheme membership details. We've got service details. It just gives you a breakdown of the service that you have built up in the scheme. That will only be against this particular record though. If you know, sometimes you have a situation where, particularly school staff, you know, you tend to have multiple contracts, or you can have in schools, and each of those contracts generates a separate pension record. So you could actually have 2 or 3 individual pension records. So if you do go on here and you look at your service and you believe it's wrong, first of all check that you don't in fact have multiple records of membership. And the way that you can check that is if you go up here where it says My Account, to the right hand side of that, or just underneath, if you did have multiple accounts, there would be a drop down option, and then it would ask you to select which record you want to look at. Obviously there isn't that option on here, so that tells us that there is not multiple records. The next one is financial details. The financial details confirms your basic contribution rate to the scheme, which is determined by your level of pay, and it confirms your current salary amount. Underneath that, there is a section called annual allowance. Annual allowance is the amount which the HMRC allow you to allow your pension to increase in value by each year before there are any tax implications. So if in any year, in any scheme year, financial year, your pension benefits shoot up in value by more than 40,000 all in one go, then the likelihood is there will be a tax charge. And this screen here is designed to allow people to have visibility of that, whether it's, you know, something that's likely to happen. But anybody who's affected by the annual allowance regulations, we do write to them every year to tell them around September or October. For most of us, it will never be an issue, but for some people, you know, it might be. Then we've got pension benefits, and we've got benefit calculators. Within the benefit calculators, there are 5 different options. The most common option I think that people will want to know about is pension payment calculator, which covers early retirement, normal retirement at your normal retirement age, or maybe even late retirement. The other ones are very specific retirement types, which would normally involve your employer as well. So the first one is deferred. So that one is if you want to see what your pension will be worth in the future if you leave the scheme and don't claim the pension, or you might be too young to claim the pension. Then there is ill health retirement. So again, that one is very much involves your employer, and your employer would normally request a quote from us if you were in those conversations about ill health retirement. There is a death benefit estimate, which allows you to forecast what the value of the death benefits would be, which will be different depending on whether you die as an active member or as a pensioner. And then there's a redundancy forecaster as well for anybody 55 or over. The most common one, as I say, will be pension payment calculator. And what you'll see on here is, first of all, pension start date. So this is the date that you are leaving your employment. If that date is wrong, because it will normally just default to your state pension age, you can click on the calendar and you can select a different date. If you do that, make sure you actually click on a day. So you can't just click on it, change the year, and it won't, you see, it won't pick that change up. You've got to be specific and pick an actual day. So the 14th of December 2056. Underneath that it says care pay. That's just the value of your annual pay that we've got at the moment, that based on the most recent information we've got from your employer. If you are in the final salary scheme as well, so if you joined before April 2014, then there will be a final salary pay box under there as well. Once you're happy with that information, if you've changed anything, press calculate. And the pension at the top will be the annual amount of income that you may be entitled to receive if you retire on that date on that rate of pay. Underneath pension it says lump sum is 0. The lump sum will be 0 for anybody who joined after 2008. Anybody who joined before 2008, there will be an automatic lump sum amount in that box. It then gives an indication of the spouse's pension that would be payable if you were to die as a pensioner in retirement, and the projected salary at retirement. Now, some people will have an automatic lump sum. As I said earlier, if you did join the scheme after the 1st of April 2008, before April 2008, then there will be an automatic lump sum in that field. But regardless of whether you have a lump sum or not, everybody's got the same options in terms of converting some of their pension into lump sum if they wish. And you can see that here where it says lump sum options. So at the moment, the lump sum is 0 and the pension amount is £20,422.30. If we start moving that blue line right up to the maximum, then in this example, the maximum lump sum could be £87,524.04, and that would give that person an annual pension of £13,128.63. Or you can go anywhere in between. What you're doing there is exchanging some of the pension for lump sum at a rate of 1 to 12. So that's the benefit calculator. It's extremely useful, and please do make sure you've got access to My Pension Online if you don't already have it. In terms of latest valuation, which was the other option underneath pension benefits, this is just giving you the annual value of the benefits that you've built up so far. So current pension value, £583.27. That means that if you don't pay a single penny more into the scheme after today, then at your normal retirement age, you will be entitled to an income of whatever the amount is there. So for this person, it's £583.27. What you can then do is click on the link that's where it says care benefits £583.27, and it will give you a breakdown of the monthly pension accrual that's accruing under the care part of the scheme. So you can see April 19 to March 20, this person's pension increased in value by £571.43 a year. You can actually click on that and drill down into a bit more detail, which is interesting to have a look at. You can see your pensionable salary, the pension build-up rate, and so on. So it is interesting to look at this information. Underneath documents, you've got two different sections. One of them is scheme documents, one of them is My Documents. Anything that is generic, so things like guidance notes, leaflets, anything like that will be published in scheme documents. Anything that is personal to you, like a personal pension estimate that's been done specifically for you, will be made available in the My Documents page, and that's because you know, it's a specific individual illustration for you. Oh. I mentioned earlier the death grant nominations, the expression of wish. So you can do that on here. It's very simple to do it, and all you need to do is put the information in and press submit. There are different categories for whether you're nominating a spouse, a child, or other. And this is a payment in addition to any survivor's pension that might be payable. But really this depends on when you die as to whether a death grant is payable or not. But make sure that you have nominated somebody. Next, we've got settings, and you can change your password, change your security response, withdraw your consent. There is a contact us form on here, and there is also one in the general area of the website, which I'll show you. And then there are some useful links on here. Things like HMRC, Money and Pension Service, Pensions Ombudsman, Pension Wise, the Pensions Regulator, Workplace Pensions, etc. So some people start to think about tax when they're thinking about their pension. So you might have questions that you do want to approach HMRC about, and you can refer to these links in here just to make life a little bit easier. So that is the online system. As I'm sure you'll agree, it's well worth making sure that you've got access to that, particularly in the light of being able to run your own estimates and get that information whenever you may want it or need it. Once you have notified your employer that you are leaving, then what will happen then is they will tell us that you are going. So they will notify us and we will start to prepare your retirement pack, your documents. Part of that retirement pack is your retirement estimate, which will look very much like this. And I think the bits that you'll be most interested in are the bits that I have circled in red, which gives you your standard benefit option or your maximum lump sum option, which is basically what we've just looked at on the online calculator. Remember, you can go anywhere in between those amounts, and it does actually tell you underneath what the formula is for converting pension into lump sum. So if you want something less than the maximum lump sum amount, but something above the automatic lump sum amount, it tells you how to work it out. Now on our website, we have provided you with quite a bit of information about the retirement process. And it's on a page that looks like this one, with a photograph of two people looking very happy, like they're enjoying retirement very much. So this is the page that you will need to refer to if you want to access that information at any time. It's called Retirement. And what I will do now is just take you to that page and give you a flavour of what is available on there. First of all, we've got a really useful video, which is just a quick reference guide really to retirement. So very much like today, it walks you through the journey, what you need to think about, what you need to be aware of, but it's condensed into a few minutes, so it doesn't obviously go into as much detail, but feel free to have a look at that. That might be useful. Then we have questions that people tend to ask us when they start thinking about retirement. So, what about my work pension? What about my state pension? When can I retire? How much money do I have in my pension? How much money do you need? So please have a look at these frequently asked questions, because some of the answers are quite interesting. There is then a section on tax, which I know some of you said tax was an area of concern at the start of the session. But basically with tax, I think it's less complicated than people think it is. So if your pension income each year is exceeding your tax-free allowance, so obviously each of us has an amount that we can earn before we pay tax, our tax-free limit. If your pension is within that tax-free allowance, then we won't be paying any tax on our pension. But if it exceeds that, then you will pay tax on your pension in the same way that you pay it on any other income. The lump sum, however, is normally tax-free. there are two tax measures in place which the HMRC have introduced, which one of them is annual allowance, which we mentioned. So that's looking for your benefits to not increase in value by more than 40,000 in a year. The other one is the lifetime allowance. And what that's about is looking at all of the pensions that you hold collectively out there and making sure that they are not worth more than, over £1 million. So again, it will never affect most of us, but there may be some people who do need to look at that. It talks here about pension payment increases. This is quite useful here, the process, so what will happen. So your employer, you will notify your employer will notify us. We will then issue you with a retirement pack, which has your estimate in it and a few things that you need to complete. I'm going to show you the pack in a minute. You need to return that to us. Now, the more prepared that you are when that pack arrives, the better. So if you've already been online and looked at your figures and you've already thought about how much lump sum you would like to take, then that's better, because it means that that pack is going to be sat with you for a shorter period of time, hopefully, which means that that gives us more time to process it when we get it back, to make sure that you get your pension on time. So try and be as prepared as possible. I am going to show you the forms in a minute so that you can, be as prepared as possible. So just don't wait for it to land on the doorstep, or it might not necessarily come through the post. It might get published to your online account, depending on whether you've registered or not. You'll need to fill the forms in, obviously, and return it to us, and then you'll receive your lump sum and monthly payments. Then there's some other frequently asked questions there. So I think the likelihood is, if you've got a question after today about your retirement, you'll find the answer on here. There is also another help and FAQs section, which is general, not just about retirement, but about lots of LGPS topics. So that might be useful. If you do find that you need to get in touch with us, there is a contact us page and a member contact form. Now on here, you just need to put in a little bit of information, tell us which scheme you're in, and you can submit an electronic query, and we will come back to you as quickly as possible. It's quite a fast response on there, so you won't have long to wait. So how do we make sure that you get your pension benefits on time? So do your homework, go on My Pension Online, have a look at your figures, think about what you are going to do in relation to your pension and lump sum. Provide your employer with as much notice as possible. So I think with leaving, people could be inclined to think, well, my notice period is a month or it's 2 months, so that's what I'm going to give. But if you can give more, then that's better. If you can give 3 months notice, because retirement is a little bit different to leaving. If you're retiring, I think it's a little bit more comfortable talking to your employer about that early, because you're not going to work anywhere else. It doesn't, it doesn't tend to carry the same sensitivity. So please give your employer as much notice as possible. It will really help us to pay your pension to you on time. Now, if you have an AVC, an AVC is one of the additional top-up options that are available in the scheme. So if you have an AVC, and you leave that running up until the day that you leave, that can delay payment of your pension by up to 2 months. What some people like to do is cancel that AVC before the final salary payment date. So making sure that they've done it before the payroll cut-off for that last month, they will cancel the AVC, which does help to avoid a huge part of that delay. But we can't tell you to do that. That would be your choice to do that. Make sure you carefully fill out and return your retirement options. Check that you have provided good quality photocopies of any certificates we have asked you for. Double check that all sections are completed correctly. So please check it once, check it twice, because obviously if it's not done correctly and you haven't signed where you're supposed to sign, then it means we have to go back to you again, which is adding time onto that process before we can pay you your pension. That brings me to the end of the slides. I did want to just show you an example of the retirement pack. Which I think will be interesting. Some of you may have already had your retirement pack through the post, and maybe you've brought along a question today. So I think, what time is it? 1:30. So we've still got quite a bit of time left, so that's good. There is going to be plenty of time for questions, so don't worry about that. This is a copy of the retirement pack, and this is exactly what you will get from us. So it's just a good opportunity to look at it now. The first section is about your personal details. Then it'll move on to marital status. Then it's conversion options. So the conversion options, it will say, do you want standard benefits or maximum benefits, or a bigger lump sum which is less than the maximum? So those things we've covered now by looking at the lump sum online. It does remind you there that you can't change your mind at a later date, so be aware of that. There is a section on HMRC. So question 1, answer yes if you have any other pension benefits already in payment. So again, if you've got other pensions that you're already receiving, then you would need to answer yes to that question. Question 2, if you are in receipt of any of the pensions listed above and they came into payment before April 06, then that question is relevant. Question 3, to ensure you have not exceeded the maximum lifetime allowance. That was the one that was over £1 million. So that's what that question is looking for. Question 4, please provide details of any pension that is due to be brought into payment on the same day as your LGPS pension. So that's if any are. Question 5, if you've ever transferred from any UK pension benefits to an overseas pension scheme. So we need to know about that. If you have any valid HMRC lifetime allowance protections, that's question 6. So again, most of us never need to worry about that. It's just a very small number of people, and you would know about it if you had that protection issued to you. Question 7, if you intend to use some of the lump sum to pay higher contributions into another pension scheme, then you need to indicate that as well. Then we'll be looking for your payment details. So we want your bank details, which you would like us to pay you into. And then there's a declaration. And this is what the forms actually look like. So your election, that's about how much lump sum you want to take. The personal details, which we talked about. I mentioned at the very start of the session, when we were looking at the final salary scheme, I mentioned that there was a protection for people who had had a reduction in pay as the result of something like a restructure. That's what this is, part 4 here. It's asking, have you had a reduction in pay? So make sure you indicate there if you have. These are the questions which we've just been through about HMRC questions about previous pensions that you may already be receiving, or any that are coming into payment on the same day as your LGPS, and any that you may have transferred overseas, or if you are planning to use your LGPS to pay higher contributions into another scheme. Your bank details, and we need your declaration at the end, a signature and a date. Now, what we will also need is a good quality photocopy of your birth certificate, please, when you return this paperwork to us. If you want to send us your marriage certificate at the same time, or, you know, a civil partnership certificate, or anything that you would like us to have up front, which may make things easier in the event of your death, then you can do that as well. But if you didn't send us your marriage certificate, for example, we would write to the, we'd write to your surviving partner in the event of your death, and we would ask for that certification to be sent to us. So that's the retirement pack. It's not too scary. All of that I'm sure you'll be able to answer easily. If you are not sure what pensions you have, then you can visit the Pensions Tracing Service on the DirectGov website, and that will allow you to try and pull together, you know, all of your pension scheme memberships. So you may think that you've joined some and you're not sure what they are and you've lost track of them. There is a pensions tracing service available on DirectGov. Okay. I would like to go back to the live survey now. So if you've still got it on your screen, that's great. If not, just bob back to www.menti.com, and the code is 49289431. And there's just a few more questions now. You've probably been listening to me for long enough, so it's good just to engage your brain in a different way now. Right, so quite a lot of people have engaged with the website recently, so that's good. How easy was it to find what you were looking for? Can you remember? Easy. Brilliant. Most people are saying it was somewhere towards easy or somewhere in the middle. So that's good. Obviously, any way that we can make that better is positive. So if you do have any feedback or suggestions, please do submit those on the website through the contact form. We're always keen to look at feedback. Thinking about the things that we've talked about today, so we've really gone into detail around how your pension will be calculated, what the benefits of the scheme are, the death benefits, the retirement process, what kind of things might delay your pension. We've had a look at the forms. What one word describes how you are now feeling? Excellent. Lots of decisions, mixed feelings, okay, excited, better, reassured, apprehensive, impatient, eager, confident, challenged, confused, mixed feelings. Okay. So quite some really positive words there. That's fantastic to see. There is, you know, some people who've said that they're still confused. I don't know whether that's something to do with our process or the scheme that's not clear. So if you have said that you are confused, please do speak up when we have the opportunity for questions in a moment about anything that's not clear or you're not sure of, because the last thing I would want is for you to go away from here with questions still in your mind. But that's wonderful. Thank you for that feedback. That's really useful for us. Is there anything after today that you feel still may cause you a challenge in terms of taking your LGPS pension? Anything that's worrying you, concerning you? No, that's good. Tax. Annuity. How flexible works. 85-year rule. Knowing when to retire. ABCs. Transfer. Deferred pensions. Okay. We can start to unpick some of these things now, I think, while they're there in front of us. So, transfer of pensions. If you are somebody who's approaching retirement, you're not going to be, I wouldn't imagine you're looking at transferring your pension, because transferring your pension is transferring it out to another scheme altogether. And we release, or the pension fund release, all liability for your membership then. So you have no benefits left in the LGPS. So I don't know if that's what that person means, but I don't think that's something that should be concerning you. But if there is a specific question about that, we can take it in a minute. Knowing when to retire, well, you need to go on the calculator, obviously, and have a look at what impact going on different dates might have. Changes in government rules. If your pension is calculated and released, it won't be changed retrospectively, unless unless there is a protection or something that you should have been able to take advantage of, or unless there is a case at the moment, which is the age discrimination case, and that's where a firefighter and a judge challenged the changes to the scheme that came about in their scheme in 2015. And as a result of that, they've won the case, and the government have now, put some information together in terms of how we rectify that problem. So there are things like that crop up, but generally speaking, when your pension is released, it's done and it's protected, and nobody's going to take it away from you. Deferred pensions, so that's about leaving the scheme and not drawing your pension. You would have a deferred pension. I suppose somebody might want to do that if they didn't want to pay the early retirement reductions. So the longer that you leave it in the scheme, the less the reductions would be. How does flexible retirement work? Flexible retirement, we can't say much about that, to be honest, because your employer has a policy on that, and it's driven by that policy. So your employer might say, well, you can do flexible retirement, but you need to make sure that you only do it for a year, and then you need to fully retire. Or if you do flexible retirement, you need to reduce your hours by 50%. You know, it's those sorts of things. But each employer who's in the fund is required to have a policy on flexible retirement, and it's that policy that should be used for each and every member of that organisation that applies for flexible retirement. So please speak to your employer and find out more about that. From an LGPS regulation perspective, it's an option to ask for it. It's an option of the scheme. So, but you know, your employer will have their own policy on it. 85-year rule. Don't worry about the 85-year rule. When you receive your retirement paperwork from us, there will be a copy in the pack that says calculation sheet that sits behind the estimate that I showed you with the numbers on it. Look at the calculation sheet. It will break the 3 pension calculations down, depending on how long you've been in the scheme. Your 80th, your 60th, and your 49ths. So that's the pre-08, post-08, and post-April 14 membership. If you are going before your normal retirement age, and if any parts of that pension is unreduced, so if the reduction says 0, then you know that your 85-year rule protection has been applied. That's a way that you can check it. AVCs. AVCs are a way of adding more value to your pension before you retire. It's one of 2 options. Another option is a PC. Let me just show you, go back to the website a moment. There's a section on the website called Increasing Benefits. Here it is. And you'll see you've got APC or AVC. So the APC option is buying more LGPS pension at a cost. So, you know, you're increasing the amount of income that you receive from the LGPS, but you are buying that additional income. You can buy up to just over £7,316 a year. The other option is a VC. An AVC, depending on which fund you are in, is provided by you know, a range of different providers. You just need to check this page. For example, if you are in Lancashire, it's normally the Prudential, and then it actually gives you a link to them underneath here. So you could click on the Prudential link and it takes you where you need to go. The reason you have to go to a separate website is because these companies are not part of us. They are separate financial bodies, and they are providing the AVC, which is a benefit of your LGPS membership. And what an AVC allows you to do is to build up a separate pot of money that's payable at the same time as your LGPS pension. and you can take it as a lump sum or as additional income when you retire. And that money is invested whilst you are paying in. And again, there's options in terms of the way that you want to invest that money. So the provider will discuss what those options are with you. So have a look at the increasing benefits page and feel free to get in touch with any of these providers if you want to know more. I don't cover this as an actual topic during the session because the session is designed for anybody who's about to embark on the retirement journey. And if you're about to start retiring, you wouldn't be looking at topping up because you wouldn't have enough time to make much of a difference. But for anybody who might not be going for another few years, maybe you're on this course early, you can look at that obviously and see if it's worth doing it. Checking your information is correct. When we looked at the retirement forms, at the top of the estimate, it gives you a service breakdown under each 3 parts of the scheme, so you can check that to give yourself peace of mind that the relevant service has been included. I think those are the main points. I'm just going to open it up now and just let people ask questions. Just conscious of time as well. I don't want to overrun, but we've allocated until 2:30, so we're probably going to be finished early, which is good for you. It gives us some time back, but there is plenty of time if anybody's got questions. Joyce.
Yeah. If we retire early, are we still having to pay national insurance for the final year up to state pension? Do you know anything about that?
If you take early retirement, then no, you are not. That you don't pay national insurance on retirement income. No.
Right, brilliant. Thank you.
Mushtaq Khan.
Yeah, you just mentioned the AVC and the APCs. You indicated that if you're going to retire soon, it's not worth taking the AVC. Would it be worthwhile increasing your APC, so even if it's for 2 or 3 years, so you get a better return?
I mean, if you are 2 or 3 years away from retirement, you can look at either option, either really, but the APC, the one where you're buying more LGPS pension, rather than the other one's more like of an investment product, and you find out what it's worth at the end, but you do get a statement regularly to keep an eye on it. But the APC option, you can actually buy that pension with a lump sum. So if you didn't have time left to arrange that top up, you can use a lump sum but you can also pay it monthly from your salary as well. Whereas the AVC, the one that's done with the other provider, you can only pay that one through your payroll each month.
Got you, thank you.
But regardless of which option you choose, the more that you pay in, the more tax relief you get in, so that you say you're not paying tax on that money because it's coming out of your salary before your salary is taxed.
Thank you.
We've got a couple of hands up. We've got Jan.
Hiya. Got a couple of questions. One is about the I did some overtime last year, and I'm wondering whether you know you talked about the gross salary.
Yeah.
And choose the best of the last 3 years, or there was the other condition about the last 13 years. Does that, my overtime payments, can I choose that year when I got paid overtime is what I'm asking, I suppose, because my salary will have been more that year.
Yes. So when we're talking about the best of the last 3 years,
Yeah.
that's only in relation to the final salary part of the scheme.
Yeah.
So for the final salary part of the scheme, it's only full-time equivalent rate of pay that we're looking at. However, under the career average part, overtime is pensionable. So you more than likely have already paid pension contributions on that overtime. The way that you can check that is to go to My Pension Online, have a look at the screen that says latest valuation. And remember, we clicked on the care benefit link and it gave us a breakdown of the pension accrual. You can actually see on there if the pension accrual has suddenly shot up for that period that you had that overtime.
Yeah. Okay then. And just one more quick question, please. It's regarding the 85-year rule. Can anybody who's eligible to retire on that choose to go on the 85-year rule, or do you have to get it cleared through your manager or your directorate?
It's just automatically, it's a protection that's automatically included. It doesn't generate any kind of employer cost, so the employer doesn't need to be involved. It just happens. Yeah.
Okay. And one further follow on from that then. How does that 85-year rule apply to your different types of retirement? You talked about there was 4 types.
Yeah. Well, regardless of which way you retire, if it's applicable, it'll be applicable. The thing is, if you're going on redundancy, then it's protecting you from the reductions anyway. So you don't, 85-year rule wouldn't benefit you because you've already got the protection. If you were going on ill health, then there are 3 different ways that you can retire on ill health. So it would depend on which tier, because 2 of them have an enhancement and 1 of them doesn't. So it just depends really, but it would certainly benefit you in a normal retirement scenario. Yeah.
Okay, right. Thank you.
Thanks. Paul, have you got a question?
Yeah, thanks, Jonathan. I've got less than 12 months to go until my state retirement age. I've got a separate dormant private pension pot. Is it worth transferring this pot to the LGPS at this late stage?
If you've been in the LGPS longer than 12 months, you normally it's something that you have to do normally within the first 12 months of joining a transfer.
No, 17 years, so yeah.
Yeah, I mean, you could still ask the question, but we'd have to ask your employer for permission. So it's, but you could still ask for it to be considered, but it normally has to be done within the first 12 months.
Okay, thanks, John.
Thanks. Richard? No, Richard.
Hi, Jonathan. Thank you for everything. Just quickly on the AVC, when I speak to my AVC provider, they point me straight back to the LPP. I've asked the question online, why can't I see anything to do with my AVC as part of the online thing? Because obviously the key thing for retirement planning is having good information. I don't really want to get a retirement pack to find out what would happen if I retire. I just want to know nominally as early as I can.
Yeah. So obviously you can get figures about your LGPS. That's no problem. The AVC, what they should be able to provide you is a very similar type of estimate, and then all you need to think about is what the value of that AVC is that's going to be paid in addition to your LGPS, either as a lump sum tax-free, in most cases, or you can purchase an annuity with it or some additional pension. But you're saying they're not giving you the estimate, is that right?
They say they can't. I have to come back to you.
And who do you know who it is? Who the provider?
Yeah, it's Standard Life.
Standard Life. Which pension fund are you a member of? Do you know? Are you in like
LPFA?
LPFA, right? I'm going to take that one away actually, and look into it, if that's all right, Richard.
Yeah, because I appreciate no one else is particularly interested. But just another thing on the contact on the, I've logged this question on the website. No one has come back to me in a month, and I haven't had a message on or anything. So, is there an issue at the moment, or can we not just have the web address, the email address, rather than the contact form?
Oh, the web address has been removed, so there is no email address now. It's a contact form, or there is a contact telephone number as well. But it's very difficult to manage the emails and make sure that everybody's getting a response within the allotted time that we expect people to get a response within. So the contact form allows us to filter those queries to the right people, and they get a quicker response. But if you're not, if you've sent something in and you've not heard back, there is a telephone number. Apologies about that.
Okay, thank you.
Richard, do you want to? Do you want me to take your? Well, I'll have your email address from the delegate list of today's session. So if you're happy for me to come back to you about that AVC query, then I'll email you. If that's all right.
Yes, please.
Okay. Donna, have you got a question?
Yes, hi, thanks for today. I've got two questions. I have 3 different local government pension scheme pensions from working in different councils. Do I have to do anything to combine those, or will they all miraculously come together when I come to retire?
Right, so it very much depends on whether they came under the same authority and the same administrator. So were they all?
I don't think they did, because I think one's the West Midlands pension scheme and one's the Warwickshire pension scheme.
All right. So do you think that when you did join your most recent pension scheme membership, did you ask for those benefits to be combined, or do you think that you didn't?
They're separate. No, they've never been combined.
Right. So no, they won't be brought together. Each one of those pension records is going to be paid separately, individually, as a separate pension, basically.
Right.
So you need to contact the relevant administrator for that particular period of membership.
Okay. Is that the same? You just responded to a question in terms of it's too late to transfer. Is it too late to combine, or is that the same thing?
Combining is different, and it depends. With combining LGPS pensions, it's very complex. Not that
why I've never done it.
Not that you need to worry about that, but that there is lots of rules around when did that membership start, when did that membership end. There's stuff like that we have to look at, and we're very much obviously guided by the regulations, and we follow them. And that's what dictates whether those records can be combined or not. But as a member, the starting point, if you're interested in combining those records together, the starting point is just to send us something in writing, whether that's through the website on the electronic contact form, just saying I've got existing membership in Warwickshire or wherever else, and I'm interested in combining it, and we can look at that for you and look at what the dates were and whether you're eligible.
Oh, excellent, thank you. And my second question was in relation to the death benefit slide that you put up, and you referred to an expression of wish. And I just wondered whether there was an ability to put more than one name in there. So, for instance, if you've got more than one children and you want your death benefit to go to your different children, Can you do that?
Absolutely, yeah. You can break it up into percentages. That's fine.
Thank you.
All right. Paul, have you got a hand up? Or
I think it was this question I've already asked you, Jonathan. I've been just incompetent enough not to have taken the hands up off. Sorry.
thank you. Right, somebody may have typed a question, I'm not sure. Oh no. Right, hopefully most of these questions we've already answered. I'll just run through them. Yeah. In terms of the slides, I can share the recording if that's better, if you want to refer back to it. So if people would find it useful, I can send the recording out after this session today. Yeah, there is a question there about the death grant. And if you're retiring later on in life, it doesn't leave much time to benefit from, or for somebody to benefit from the 10-year guaranteed pension rule. That's true, yeah, because it's only up to a maximum of age 75. Final salary element. If you reduce your hours between now and retiring, does it have any impact on your pension? That's a really good question. If you reduce your hours, that will not affect the full-time equivalent rate of pay that's used for your final salary pension calculation, but it will obviously impact the amount of pension that you are building up now under the career average part of the scheme. But it won't affect anything retrospectively. Anything up to the day that your hours change, it won't be impacted. Is the final salary figure on the pension calculator page the salary on retirement? It's the salary on retirement, not in 2014. There may not be an so Jenny's asked the question about being able to work out on the calculator if you don't take a lump sum. If you have an automatic lump sum in that field on the calculator, then you can't go any less than that, but you obviously don't have to increase it any more than it is already. If the salary figure is wrong, do we need to update it? You can update it for the purpose of the calculation, but it will catch up eventually, yes, as your employer gives us more and more information. Yeah, 85-year rule can only be exercised once. So if you claim the protection on one of your records, you can't claim it on another, because we're looking at your service. We're looking at your cumulative service. So if you've built up, 25 years across 2 records, you've used that service then for that protection. You can't use it again. Do you have to take your pension in one go? You do have to take it all at the same time. So if your retirement pack comes online, you can print it and return it through the post if you want to attach photocopies, or you can fill it in and scan it in and email it to us if you want to do it electronically. With the certificates, it's good quality photocopies, remember. We don't need originals. Marriage certificate required along a birth certificate. Yes, to evidence a change of name, that's right. I work for a school and used to be term time. Now I'm full time. Pension still says part time. I wouldn't worry about that. It probably will say part time just because of the working pattern that schools follow, but it doesn't mean that you're working part time literally. It might just be the way that the indicator is set on our system. But you know, your service is will be coming through to us from your employer correctly, and you can check on My Pension Online as well how much your pension is accruing by in each period. Just go to the latest valuation screen. So if you don't have a spouse or an eligible partner, there would be no survivor's pension payable. Some people, you know, don't have an eligible survivor, and some people do, but we all pay the same into the scheme, so it's averaged out really. What if I retire but then go back to work for another company under the same scheme? That's fine. You can rejoin the scheme, and in most cases your pension is not affected. I would just notify us though in writing. Does overtime payments affect gross salary in terms of pension? Yes, it should be included. Lifetime allowance is the value that your overall pensions are worth, and it's looking for them to be worth over £1,073,000. So it won't affect most of us, but you can find out more about that on the HMRC website if you want to. Okay, lots of people are saying yes to the recording. Started my pension in '89. I have 10 years part-time. I'm entitled to full pension. So basically, for any periods that you were part-time, your service is scaled down to reflect the part-time working. And then when you've gone full-time again, your service is building up on a full-time basis. So it's an accurate reflection of what you've done. There isn't a way that you can buy back that service on a like-for-like basis, but what you can do is do a top-up if you want to. Look at an APC or an AVC, but rather than looking at, you know, what you might have missed, just think more generally about topping up and how much you could afford to top up by is probably the best approach. So if you're 57 and you're interested in 85-year rule, you need to check your date of birth, that you are definitely going to be eligible. And if you are 57, the 85-year rule kicks in at age 60. So in the calculation, the bit between 57 and 60, there wouldn't be any protection applied to that bit, but you would receive the protection on all the rest of it. So just part of it would be reduced if you were eligible for it. But you could still go at 57, you know, it wouldn't stop that. No, it won't tell you on your record whether you're eligible for 85-year rule. Right. That looks like all the questions. So quite a few have had to drop off and go to other meetings. But I think we've covered a lot there, and there's been some fantastic questions. I hope you found it useful. I will share the recording with you. It will take a few days for me to do that, but I will make sure that you get it using the email address that you signed up with. Mandy, does that mean that any pension forecast that I get at 57 doesn't include? No, it will include it if you've got eligibility at that age. It will include it, yeah. Okay, thanks very much, everybody. Take care and good luck with your retirement.
Thank you.
Thanks.